Hey guys, what's going on? Jebb here, and today I'm going to be doing a market update for the 21st of March 2018. I'm going to do a little bit of an overview of the market in general before we get into it, and then I'm going to do some technical analysis on Bitcoin. I'm going to show you some levels of support and some levels of resistance that are going to be very important in the next couple of days as Bitcoin kind of tries to dig itself out of this little hole it's put itself in the last 2 weeks or so. I'm going to talk about the death cross that everybody's concerned about, or at least talking about. I'm going to do a little bit of technical analysis on Litecoin at least. I might show you some stuff on Ethereum. I definitely want to show you some stuff on EOS rather. We'll get to that in just a second. And I'll show you a couple of news bites. But before we get into that, if you enjoyed the video, you should definitely think about leaving a like and subscribing because I make cryptocurrency videos every single day. So let's get into it. Bitcoin is currently hovering right around a $150 billion market capitalization. Its price is just under $9,000 after rising to right around $9,200 this morning, but I'll be talking more about that in just a second. The Bitcoin dominance is kind of tapering off. I think the Bitcoin dominance, if I remember correctly, got up just around 45% a couple of days ago. Let's see if we can get this chart to load. Let's go in here to 7-day. But nevertheless, the Bitcoin dominance is steadily continuing to rise. I think we're seeing a tiny little dip here over the last couple of days. This does not want to load. There we go. So there's a little high right there, 45.5%. It's kind of tapering off a little bit. A lot of times, a lot of the value in the market will flow into Bitcoin as Bitcoin kind of takes the lead for a bull market. So we definitely like seeing that Bitcoin dominance continue to rise. Traditionally, that's been up around 50 to 60% depending on where the market was. You just saw part of the thing there. And if you want to look at more of that, CoinMarketCap, I mean, I think most of you know what CoinMarketCap is by now. The market capitalization as a whole is currently around $350 billion. Let's see if I can zoom in real quick and show you something that happened in the last couple of days. I touched on this in a video a little while ago, but I want to touch on it again because this is important. We hit a bottom down here of, we hit a bottom down here a couple days ago of right around $280 billion, which is actually a double bottom because we hit a bottom down here in February when Bitcoin hit its bottom around 6,000 of right around $280 billion. I had it just a second ago and I've lost it. Well, you're going to have to take my word for it. The bottom down there is right around $280 billion. So we do have a double bottom on the total market capitalization of cryptocurrency, which is absolutely a good thing. Excuse me. So Ethereum is down a little bit. If Ethereum hasn't really had as strong a recovery as some of the other coins here, EOS has had a really strong recovery because it slid all the way down here to 10th place, if I remember correctly. It's had a lot of value come back into it in the last couple of days. The thing about EOS is that EOS, there's definitely a debate about whether or not EOS belongs in the top 10, considering that its cryptocurrency doesn't even have its blockchain ready yet. The technology, the ICO is not even... The ICO is not even finished yet. We have until, I believe the ICO ends and the registration begins, or actually the deadline for the registration is June 6th. Correct me if I'm wrong, it's either June 6th or June 1st. I'm going to be doing a video on that when that comes up, but we'll get to that when that happens. Anyway, let's get into the Bitcoin technical analysis here because I'm sure that's what all of you are here for. I'm going to start here on the day chart. I'm not going to talk too much about the short term, but I am going to show you one thing. I lied. I'm going to start here on the 1 hour chart because I want to show you this. Bitcoin got resistance right up here, right around 9,200. It got very close up right here around 9,200. We saw a couple of very good green candlesticks. And we talked about this a couple days ago, but I also want to show you that we were in a descending wedge pattern here. We had this downtrend right here. The touch there, and there. And a touch here, here, and here, forming the descending wedge. And almost always when that's happening, the market's going to break bullish out of it, and if it's the reverse, you're going to break bearish out of it. That's just how that typically tends to go. It's another classical wedge formation. I love my wedges if you've watched the channel for a little while. But we had a very nice breakout of here after some news regarding the G20 summit and that they weren't going to be talking about regulation just yet. They're postponing it until July, I believe it is. But now we also got above this other trend line, which this one right here is extremely important. I'm going to be brief with this because I talk about this in literally every single video, I think. But that is this trend line right here. 1, 2, and then 3 touches. This is the downtrend that is forming the trading channel that we keep going in and out of over the last week or so. And then we have a downtrend of support here. So we're out of that, but we're not out of the log scale. Let me show you that first, and then I'll get into those levels of resistance I want to show you. The log scale essentially adjusts the way the chart works so that instead of being linear, it adjusts it so that the chart is scaled based off of percentage movement. So if you were to go from $5 to $10, that's a 100% increase. If you were to go to from $5,000 to $10,000, that's a 100% increase. So it scales it so the chart is not linear in the way that you would expect it, and these moves back here look just as large or even larger than the moves we're seeing up here. So the reason I want to show you the log chart is I think a lot of people don't actually know about this. Maybe I'm misjudging, but a lot of people don't realize that we are still under a downtrend here, a very strong downtrend. We had a touch here up at 20,000. We have a touch right here at right around 17,000, and then right here right around 11.5. So that's kind of what caused this double top that we saw, was the touching on both of these downtrends, the one I'm showing you right now and the one back here on the auto scale, which would be this one. And it just so happened that that formed a double top, which was most unfortunate. I'm going to go ahead and get that off the chart now. So first I want to talk about the bearish potential, because I am kind of starting to believe that we're seeing a bit of a bull trap here. We're going to see what happens, but the levels of support that we do have are definitely the level of support right here around 7,200, which was our bottom currently. If we can form a double bottom to counter this double top, that'd be nice. If that doesn't hold, we still have this, well, actually, this would be the first line. We still have this downtrend that I was talking about, that nice long-term downtrend. If we can fall down here and get support on it, that would probably be the first level. After that, we have this level right here. What did I put that there for? I put that here for this bottom right here, which was right around 7,700. We did see a double bottom in there, I think, or I don't remember exactly. I know it wasn't a double bottom, it was slightly lower. We do have a lot of support right here around 73 to 7,500, right around 7,400, somewhere around there is still a level of support. It's more of a support area than a really well-defined support line, so keep that in mind. And then after that, we have the two levels of support that I've talked about a lot on this channel. And then I'm kind of surprised we didn't go down and touch. In one of my videos recently, I talked about me thinking that the bottom's close, and I do think the bottom is close, but I was expecting us to come down here and hit this uptrend right here, which is another really important uptrend that you should be aware of, that has a touchdown here at 1,800, 3,000, 6,000, and then I was expecting there to be one right here around 6,800 or 7,000, but we didn't get one. And if that one fails, the last real line of support is 6,000, and then we can just keep going down here to highs and saying 5,000, 7,000, 1,200, but I don't think we're going that far down. But anyway, those are the levels of support that we need to look out for. And the reason we need to look out for them is because I am kind of starting to believe we're seeing a little bit of a bull trap here. I'm not saying that we necessarily are, but the technicals right here are not looking great. If we zoom in here today, not the all-time high, the daily high was right around 9,200, and as you can see, we're touching this moving average right here, which is actually the 200-day moving average, which it's most unfortunate that we fell below it twice, because that is a really important level of support. As you can see, if we come back here in history, we never even really got anywhere near it. In both of these runs, we got support at the 100-day moving average. We got support down here at the 100-day, 100-day. The 100 days is one in the middle right here. So it's really not a good thing that we fell below the 200-day moving average, which kind of makes me wonder if we're actually going to get resistance at it, which would not be good. These moving averages are traditionally lines of support because Bitcoin is traditionally in a bull market, but we're not necessarily in a long-term bull market anymore, guys. We got to keep that in mind. We could be here for another, we could be below all-time high for quite a while. We'll just have to see what happens. But if we get support, if we get resistance here, that's probably going to mean that this death cross that everyone's talking about is going to happen, and that would be when the 50-day moving average up here crosses the 200-day moving average. And that doesn't mean that the world explodes or anything. It's just not a good sign, because if we come out here and we zoom way out here, way back in history, because if you don't remember your history, you are doomed to repeat it. If we zoom back out here to the bull market and then subsequent bear market of 2014, well, late 2013, then 2014, the 50-day moving average crossed the 100-day, as we have already had, and then it crossed the 50-day, and that was kind of the nail in the coffin, as a lot of people seem to believe. I don't necessarily think that's what caused it. I think the value of Bitcoin was just a lot higher than the DEUV was a lot higher than the CUV. If you watch my video on the J-curve, you should go watch that. There'll be a link right here. If we zoom in here, though, like I said, we're getting resistance here at the 200-day moving average, which is no bueno. If we come in here to the hour, that's right around 9,200. We don't like getting resistance at moving averages, guys. We got resistance up here on the 100-day moving average, right up here around 12,000. Not a good sign. We don't want to see that happen, but if we manage to battle through that, we still have a lot of room to go. If we use Fibonacci retracement here, now I've never really talked about Fibonacci retracement here, but really what it is, I'm going to be brief, is you just need to look at these lines right here, these levels right here, like these. We have 78.6%, 61.2%, 50%, 38%, and 23.6%. Those levels are determined by a way that you can divide Fibonacci numbers by themselves. It's not important for this video, but essentially what matters is that in a retracement, when you're trying to come back from the retracement, or vice versa if you're a really complicated trader, then you can use these levels to determine where certain price levels or where certain levels of resistance might be. And if we use the Fibonacci retracement here, and we pull it down here from the top of this bear market to the bottom, then we see that 9,500 is actually going to end up being let's put that right there, is going to, right around 9,500 is going to be an important level of resistance because Fibonacci is telling us, and also not just in relation to Fibonacci. We come here, we get rid of that. The 50-day moving average is also there, so if we manage to get above the 200-day moving average, then we also have the 50-day moving average as resistance, which is no bueno. We don't want to see that. But to be totally honest, guys, we have a lot of resistance all in this very confined area right between 9.3 and 9.6-ish. So I'm kind of starting to, I kind of think this is a bull trap. I think what might happen, and don't take my word for this, this is not financial advice, I'm not trying to tell you what to do, but what I think might happen is we might fall back over, we might see this death cross, and we might come down here and either make a double bottom here at 7.2, come down here to about 7,000 on this uptrend, or hit about 6,000 and get a double bottom for the very long-term bear market. The last thing that we really need to do to get out of this market is get above that long-term downtrend. What are you doing on my computer? I didn't ask for you. I'm recording a video, fellow. But we need to get above that long-term log downtrend that I showed you a second ago. Let me show you one more time for clarity, and then we're going to move on to a couple of other charts because the video is already getting really long. That level right there is really one of the last really important levels of resistance for us to go back up to all-time high. It's going to take a while for that to happen, guys. We got a lot of resistance to battle through. We also have this double top here at 11.7. It depends on how you look at the market as to whether or not we think the market is going to go back to all-time high in the next couple of months. I personally I want to believe that it will, but also there's something in me telling me that it's not a good idea to get my hopes up, to be totally honest. We're going to see what happens. The Bitcoin adoption, no matter what happens, is still continuing to rise. So guys, I don't want you to worry about price action. I've zoomed out before and shown you guys how irrelevant this price action is, and I'm going to do it again. Up here is $200,000. Here's the market. Let me zoom out even more, and I'll show you where this is 2019 right here. That's 2019 right here. If we continue zooming out, and we continue zooming out, we continue zooming out, how about we come this far? We need to come out even farther. I got to go out to the week chart. I'm going to make this point really briefly. Here we go. This is 2040. And if we come out even further, that's $1 million. So that's where 2040 and $1 million intersect. And this is the entire history of Bitcoin. Or actually, this is the entire history of Bitcoin starting in like mid-2013. So guys, like I say in every video, I don't want you to worry too much about short-term technicals. I really think it's a much better idea to be a long-term investor in cryptocurrency. A lot of people that went long on like internet companies that actually managed to succeed, like Google and proto-internet companies like Apple, they did really well. I mean, they didn't get into the currency, they didn't get into their investments so they could turn around and make a profit and put 10 bucks in and come out smelling like a rose in the next 10 days. It just doesn't happen that way. You got to work for it and you got to wait for it. I mean, it takes time. Cryptocurrency, people have related it to NASDAQ with 15 times faster. I've seen headlines like that. 15 times faster NASDAQ is still, it's still very slow compared to what most humans tend to deal with. I mean, a lot of things in human life tend to happen on very, very small time frames, so we're not naturally tuned to deal with things on a longer term time scale. So what I'm saying is, be a long-term investor if you're going to invest, or you should probably just instead be a trader, because it's not, you just don't want to get your hopes up too much for the short term with Bitcoin right now, and with any cryptocurrency in the short term anyway, or with any investment anyway. You've got to be able to wait for those returns, because if your investment doesn't go well, then you might have to wait a couple years for you to get your money back or to get a profit. A lot of people like that in 2013. If they bought the top here at 2013, they probably felt pretty bad about themselves. But if they waited 3 years or 4 years, they could sell at 20,000 and still be up like 18 times. So guys, I don't want you to worry about short-term price action. I think a lot of you aren't as worried as you used to be. I don't get as many hateful comments about Bitcoin going to zero anymore. Maybe because I troll them whenever they leave those comments. Anyway, I'm rambling way too much. Let's get on to Litecoin. I'm going to be very brief with Litecoin here. Litecoin over USD is in a trading channel right here. I've talked about this before. We got some resistance here at this resistance line. On this resistance downtrend, rather, on Litecoin. We got support here on the 200-day moving average. We're going to see if we can break out of this downtrend. If we can break out of the downtrend, get above the 50-day and then the 100-day, that's going to be our ticket back up to the moon for Litecoin. Let's go talk about Ethereum a little bit, and I want to talk about EOS. I'm going to talk about a bit in the news, excuse me, and then we're going to be done. But Ethereum is currently falling off a cliff, as it likes to do. Ethereum tried to get up back here above 600 and got resistance here at the 200-day moving average. That's what this line is here. Saw a lot of red volume the other day. Not going to talk too much about Ethereum. Really, our two levels of important support right around here, around 4,475 because of history over here, and then we have a little bit down here around 400. I don't really think Ethereum is necessarily going to go that far, but we do need to break this long-term downtrend. It's creating a trading channel just the same way that Bitcoin is in. I want to show you one thing about EOS, because EOS has had a really nice couple of days. EOS, like I said at the beginning of the video, slid down here to like 10th place. It's up here back at 7th. It's had a nice couple of days. We're kind of about to see a 50-day and 100-day cross right here, which would probably make this kind of fall over or create a bull flag. We'll see what happens with that, though. And I don't even have time for this article, but I'm going to go ahead and read it anyway. Twitter CEO says Bitcoin will become world's single currency within a decade. Now, I know that a lot of you guys have very, how do I say, diverse opinions about Jack Dorsey, as do I. You have no idea my opinions on Jack Dorsey. But Jack Dorsey, nevertheless, is an influential person in the internet. And Jack Dorsey is the CEO of both Twitter and the payment service Square. He has said that he sees Bitcoin as the world's and the internet's single future currency, which is definitely a little bit of bullish news. That's a little bit of FOMO for us, guys. We need a lot more news like this to come out to get the people that don't know what they're doing to invest, because a lot of people trade based off of 1 or 2 news articles rather than doing the technicals, which you guys are better than that because you came here to look at me do technical analysis. But if you enjoyed watching me do that technical analysis, like I said at the beginning of the video, you should definitely think about dropping a like and subscribing, because I make videos like this every single day. Thank you all for watching, and I will see you in the next video. Peace.